Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, June 3rd, 2013. Well, a continuation of the trend to the downside today. In the candle it's made a lower high and a lower low. The previous day's trading we had establishment of that downtrend with a very large black body candle. The black body denoting a substantial amount of net bearish progress made on the day between the open and the close by the sellers. And a day where we saw a breakout from that symmetrical triangle, which we'll have a look in a minute. But going to today's trading, a white body candle. So the sellers have basically lost all of that momentum that they found with the previous day's trading, and the buyers have found some upside momentum in net terms. So we've had the buyers make an amount of net bullish progress on the day between the open and the close. We've also seen the buyers open up around the midpoint level and close up at the high, suggesting that they've closed with control, and the shadow on the bottom highlights the sellers losing commitment as the market traded down below the Kijun-sen, the pink line here. And we saw for the previous day's trading that the market closed roughly just around the Kijun-sen, and for today's trading the market has been rejected from there. So this highlights very well how the Ichimoku indicators can act as an area of support or resistance. Now, in terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market was trending down, and here today we've seen the market rejected from below the 100% level with a bullish candle. The trend hasn't changed, but this does suggest very good potential for a change of trend back to the upside, so we are looking at the high for a potential higher high and higher low. And also in terms of the Fibonacci retracement, we're in an expansive mode of that. We've traded through the 100% for the previous day's trading. Today we tested down below the 161.8%, and we have a bullish candle with that price rejection from that area. Sets the market up for a potential higher high and higher low. In terms of the pattern that we saw previously, that symmetrical triangle, we had the very strong uptrend in place, then the congestion with the converging peaks and troughs. We drew the boundaries. We were waiting for a breakout in either direction and a close below or above the boundary. They tend to be continuation patterns, so we were prepared for a breakout to the upside, but we ended up with a reversal pattern and confirmation of that when the market closed down below there and in a bearish manner for the previous day's trading. This strongly bearish close down below the bottom of the pattern did suggest that there was some confidence in this market trading lower and perhaps even meeting its target. But the thing was here that the market had to interact with the Kijun-sen, and the market found support around the Kijun-sen. So looking at price action and breakouts and patterns and whatever, we do need to look at it in context of the Ichimoku indicators, and the context was that it was a breakout to the downside when the market was trading above the cloud and above the Kijun-sen, so we had a bullish bias in those higher time frames. So we didn't have a lot of confidence in the market's potential to reach its target. Having said that, however, there is still a possibility. If we do see a bearish close down below the Kijun-sen, then we could see the market meet its target. But before the market trades there, we do have some very strong support around this 1597, roughly 1600 level. So a good likelihood that the market will see some support coming in around that area. But here certainly the trend still hasn't changed. There is a possibility of the market reaching its target, but today we've seen the buyers take control of the market. Now, in terms of Ichimoku, obviously a bullish market in that long-term time frame, so the market has a bullish bias, and we will be looking to trade with that higher time frame. The market has been trading above the Kijun-sen for quite some time, and we are seeing the Kijun-sen hold as support. If we do see a bearish close down below that Kijun-sen, it could mean a change in sentiment in the market and suggest that the market would have a possibility of trading down to the 1600 round number level of previous resistance and potentially now support, but no sign of that happening at the moment. But the market has been trading down below the Tenkan-sen for some time, and we've seen the Tenkan-sen act as resistance to this market. market, so we have a bearish market in the fast term time frame. If this market does change trend, obviously the area around the Tenkan-sen, which at the moment is around the 1655 level, that will have very strong potential to act as resistance, as we've seen for the past 3 out of 5 trading days. So that is a crucial area that we need to watch. If we do see a bullish breakout up above that Tenkan-sen, then we could quickly see the market testing up to the all-time highs around 1687. A bit of a zone of resistance, however, extending down to the 1661 level, so do be aware of that. But really, the areas that we should be looking at here are for a potential continuation of the trend to the downside. Watch around the Kijun-sen, which is trading around 1632. The low is around the 1622 level. We have had the buyers take control of the market today. This also is a potential bullish harami pattern, and we should be looking for confirmation of that with a higher high and a higher low. So the high big of this market, of this day's trading, becomes very important around the 1640.5 level, and then potentially strong resistance up around 1655.